Ladies and gentlemen, welcome to Colo Group's expansion into China webinar series. This is part 5 of 10 webinar sessions. The title of today's presentation is China Corporate Compliance, Updates and Tips for Securing One's China Investment. First of all, a short introduction of our topic today. Compliance is a headache for any investor. However, complying with Chinese laws and regulations can be a major difficulty for any company doing business in China, particularly with language and cultural barriers. The endless introduction of new laws, regulations, circulars, guidelines, followed by the variety of interpretations of these documents by central and local governments, as well as corporate service providers, lawyers, accountants, or auditors, can create a compliance nightmare for any executive. Failure to ensure corporate compliance can carry penalties and a poor standing with the various government bureaus. This webinar is directed at company secretaries, administrators, in-house counsels, and finance officers responsible for the operation and compliance of China Wholly-owned Subsidiaries, joint ventures, and representative offices who are looking to receive updates on compliance regulations and tips on general entity and document management in China. I'm very pleased to have our director at Colo Group, Mrs. China Wholly-owned, as our speaker today. Before we begin today's presentation, allow me to settle some administrative matters. I would like to make sure that the sound system is working perfectly. If you could hear the introduction and you can hear me clearly, please click the hand button in the control panel, which will give me the signal that we have no technical issues. If you're using your computer and mic and speaker system and you have trouble listening, please note that there is the option to dial in by simply clicking this in the audio section of the control panel. Please note that we're recording today's webinar session, and the presentation, together with the recording, will be distributed to the registrants by the end of the day. Ladies and gentlemen, as we do in all our webinar sessions, we do encourage all our attendees to submit their questions as well as comments into the question section of the control panel. The presentation today will last approximately 45 minutes, after which we aim to have a 15 to 20 minutes Q&A session. Please don't be shy in inserting your questions or sharing experiences. I will now pass the microphone to Christina, who will introduce Colo Group and herself, and will then begin with today's presentation.
Thank you, Barbara. Colo Group is a CSC company that provides a wide range of market entry consulting, incorporation, tax, accounting, and human resource services to companies that are interested in entering and expanding into the Asian region, primarily into the 3 jurisdictions of Hong Kong, Singapore, and China. Our firm has just over 120 professionals that are located throughout our 10 offices within the region. And our main objective is to assist foreign investors by creating tailor-made solutions for their existing business models that will fit into the Asian market. One of our unique advantages is that we do speak over 10 languages internally, so we are able to communicate with our clients in their mother tongue. Just a little bit about myself. My name is China Wholly-owned. I'm a director at Colo Group, and I've been with the firm since 2003 when I opened our first China office. I've been assisting foreign investors not only with their market entry, but also their expansion into the region, and unfortunately their liquidations in the market as well. I'm co-author of our monthly magazine, ChinaInvest.biz, and I also hold numerous seminars, conferences, and webinars on a global basis. If you're interested in learning more, please do go to our website to find out more information. Now, corporate compliance is a rather daunting task that when people enter the Chinese market, they don't really focus on what needs to get done once everything is actually set up. Basically, their focus at that point of the setup is, I'm thrilled we're established. It took a long time to handle the establishment. Bank accounts are now open. Let's start business. Let's start selling. Let's start doing the activities that we want to do in the Chinese market. This is where problems then arise, especially for the long-term development of the company. You need to be aware of all corporate compliance, regulations, and issues that occur on the Chinese market. Now, I've listed here quite an extensive agenda, and this is just the top, the superficial level, the main items which you need to consider in terms of corporate compliance. But there is so much more nitty-gritty details that you also need to be aware of. So I will be going through each of these items in terms of thought processes that you as a company need to consider, in terms of documentation, in terms of signing, etc., in terms of time frames as well. And the final slide for today's presentation will be looking at what are Kohler Group's tips for you in terms of preparing for all of these corporate compliance issues and how to really maintain the documentation so that if any type of change needs to occur, you know at that moment at what the current status is of your company and how you can then change it. So let's begin. The first item and the first few items are relatively straightforward. On an annual basis, you need to prepare an annual inspection report that is submitted to a variety of government bureaus. These inspection reports in some cities can be done online, and in other cities they are done manually. And the whole concept behind these annual inspections and these annual reports is to provide statistical analysis about the status of your company, the quantity of employees you have, the business flows that you've created within your company, and ultimately the success or failure that is occurring within that entity. The documentation is quite extensive. It can only be completed once your annual profits tax filing and audit has been submitted and been done. And there are deadlines of June 30th of every year. Whether you are a limited company, an LLC, or whether you're a representative office, you must go through this annual inspection report. The main issue is the following. If you miss that June 30th deadline, basically from July 1st, you are blacklisted within the Administration of Industry and Commerce's computer system. Very rarely are you notified that you've missed the deadline. So it is important to have somebody in your team or to have your outsourced provider remind you of these obligations. And ultimately, if documents are completed by them, all you need to be aware of is that the legal representative has to sign off on these documents. Now, what is one of the critical dilemmas that's occurring right now with the annual inspections and the annual reports is that surprise visits are being conducted primarily for representative offices. Surprise visits by the Administration of Industry and Commerce, the MOFCOM, and a variety of other bureaus can happen, meaning they're not going to call you in advance. They're going to show up at your door and see whether you truly exist. They'll want to see that all the data and statistical analysis that you've put into these reports are true and valid. So I've listed here certain items that you just need to be aware of. I mean, they're questions that I get quite frequently from my own set of clients. What happens if there are delays in the submission? Well, like I mentioned, you are blacklisted. You have to pay a certain amount of penalties. And this is one thing that you need to be aware of. Penalties in China are not expensive like they are in the West, in Europe or in the US. Penalties should be actually a minor part of your concern. You know, it's a couple hundred renminbi, a couple thousand renminbi. What is the issue is more the fact that the Chinese government, the various bureaus, are aware that you have caused a delay. And you don't want them to be aware of that. It's more the whole guangxi, the relationship aspect. You don't want to falter on that. The penalties, it's not great to pay a penalty, but the amounts are not exorbitant that it's going to break your cash balance. The issue is more just the relationships that you're developing with the various government bureaus and making sure that you're not blacklisted in their computer systems or there's no black note that is made saying delays have been made. If you don't complete the annual inspection, well, quite frankly, you are blacklisted. If you are delayed, for example, you're not aware that the deadline was June 30th and it's now June 26th and you need more time, then on June 26th you should apply with the government office and say, I need an extension. If you're honest and open, there are no issues with that. You might get a slap on the hand, but no note will be put in the computer system regarding your status. Online forms can be done in the majority of the major cities in China, but in most other cities, you do have to fill in A3 sized papers with all the statistical analysis, and you do need to have the legal representative sign off on them. Now, the key point, though, which for me is the most critical, is what happens if you do get a surprise visit and nobody's sitting in your office? Ultimately, you have a virtual office concept that you've created in China, which obviously reflects back on the implementation phase of your entity. Now, virtual office concepts in China should not exist. They're not legal. If you do set up an entity, whether it's a representative office or an LLC, they need to be operational. Unless, of course, you've decided to freeze your structure. But then you do need to notify the government if you are freezing your structure. So what happens if no staff? And I'll give you a case study on this. We actually have a client that is operational in China. They do have staff in China, but the staff are actually working in clients' offices on a day-to-day basis. They switch from client to client. The office has no receptionist. There's no real need to have an administration purpose. And when there was a site visit to that office, nobody was there. The Administration of Industry and Commerce took a padlock, locked the doors, and put a notice similar to what you see in terms of eviction notices on the door, which basically meant that when a staff member did want to come to the office, unfortunately, he wasn't able to enter. He wasn't able to obtain access to his computers, to the files, etc., etc. Now, it took about 1 week in order to get the Administration of Industry and Commerce to release the padlock from the door and to prove that actually the office is operational, that there are staff, and it was just a matter of explaining to the government offices that the staff work from clients' offices, and that was it. But you had 1 week, you had 5 working days where you weren't able to enter the office, and it did halt the business to a certain extent. If you are operating out of a business center, you don't really have issues with that because you have the business center facilities where there are receptionists that if there are surprise visits, they can manage those surprise visits. If you have your own office space, a critical point to consider is, do you need to have a permanent staff member, whether it's an admin person, a secretary, to be permanently based in your office in case of situations like this? It's food for thought and something definitely to think about in the long term of your operations. Business license and registration certificate renewals are a must on an annual basis. It's a pretty straightforward basis in terms of LLCs. You need to take your business license, get it chopped and reviewed, and finished. But what you also need to be aware of in terms of LLCs is the fact that in your articles of association, you do have a term of validity. The validity is usually minimum 10 years, and it can be up to 50 years. What a lot of people are not aware, and obviously they forget because it's long periods of time, 6 months prior to the end of the validity period, you need to formally renew your LLC. And you need to make sure you do that 6 months in advance because that whole renewal process is almost like establishing a new entity. Basically, the Administration of Industry and Commerce wants to verify, is the shareholder the same? Is the shareholder in good standing? Does the shareholder have finances? What is the current financial situation of the LLC in China? So it is a lengthy process, and we do recommend that this process start at least 6 months prior to the end of the validity. So for an LLC on an annual basis, you just need to get your business license checked and chopped, but remember the term of validity of the LLC as well. In terms of representative offices, there is a renewal process that does need to occur. And currently in most cities, the renewal process is up to 3 years. The validity period is 3 years. In some cities, it's also up to 5 years. In some Tier 3, Tier 4 cities, you will have to renew on an annual basis. And what is a little bit of a pedantic situation is that with a representative office, there are too many fake rep offices in China with illegal shareholding entities. And as a consequence, you do need to get notarized copies of the shareholding entity of the rep office to complete the RO renewal. And that's what is actually a time-consuming step and a costly step as well. If you are based in Europe or in the US, you need to go to the Chinese embassy or the Chinese consulate to get the parent company documents notarized. In Hong Kong, you have to go to a China designated notary to get the documents notarized. Now, one of the latest updates, and this update is from October 2015, is that all existing entities in China have until the end of or mid-2017 to update their business license, their tax certificate, and their enterprise code certificate into what we have nicknamed it as the 3-in-1 business license. Now, why is this a requirement? Basically, what has occurred is that there is now a unified social credit code which is applicable for all government offices. It is basically the company's code. So if you type in this code at the Administration of Industry and Commerce, the company's information pops up. If you type in that code with the Tax Bureau, the company's information pops up. Actually, it is a system whereby all government offices have now unified the company's code so that they all have access to your company's details and backgrounds. As a consequence to all of that, there's only one license that is now issued representing these 3 government offices, and it's the traditional business license, which basically means that there is no longer a tax certificate and there's no longer an enterprise code certificate applicable to companies in China anymore. All existing companies in China must go through this update. And primarily what the various Chinese government officers are doing now is that with the annual inspection that is up and coming by June 30th, the governments are saying in that process you do have to convert your business licenses into the 3-in-1 business license. So they're kind of forcing you to go through that process. Very straightforward process. In our experiences thus far, no documentation needs to be signed by the shareholding entity or the legal representative. It's a very swift process that can be done within 24 to 48 hours. Now, one of the key points that I get asked a lot about from my clients is that whenever you're doing a change, for example, this 3-in-1 business license or any other type of corporate compliance change that occurs within your entity, does the shareholder or does the representative of the shareholder or does the legal representative of the China structure have to go in person to the various government bureaus? Do they have to sign documentation? Could the legal representative issue a power of authority to have somebody sign on his behalf? Basically, it's all related to efficiency in terms of running your entity. Most of the time, the representative of the shareholder or even the legal representative himself or herself won't be based or residing in China. And as a consequence, if you want to get certain changes done on an expedited basis, you do want someone locally to sign quickly and submit the documentation versus couriering or emailing documents, printing them out, signing them, not signing them well, etc., etc. So power of authorities are accepted in China. In most cases, the powers of authority also need to be notarized by the local Chinese consulate or embassy in order for it to be validated. But one of my tips is if you do give this power of authority to someone that is based locally, make sure that you yourself are aware of any changes that are occurring within your structure. Don't assume or don't feign ignorance and say, well, I gave the power of authority to someone locally, I don't have to pay attention anymore. That's a wrong perspective to have, because ultimately the legal representative as well as the representative of the shareholder are ultimately liable for this entity in China. And these two individuals should be aware of any changes that are occurring in the long term. Now, one thing that when we do internal health checks for companies in China, one thing that is very common is that specific licenses and contracts are never renewed. So if you're looking at special licenses like ICP licenses, food and beverage licenses, accounting licenses, all of these generally have to be renewed on an annual basis together with the business license. So make sure that those licenses that are actually needed and are important for the activities of your business are up to date. Because in critical situations, if a surprise visit is done and these licenses are not updated, then again, your business can be halted. Trademark licenses have also validity periods. Make sure that you are renewing your trademark licenses in advance and on time. Even more critical, contracts with suppliers, contracts with customers, contracts with third-party providers, your lease agreements. All of these documents, be privy to their validity terms and make sure they are renegotiated, updated, and signed and filed internally within your organization. Without having these documents filed, if there's breach of contracts, you can't take your supplier or customer to court. You're working on an old contract basis that has never been renewed. Make sure you go through these compliance issues and make sure these contracts are certainly up to date. Lease agreements, you will never have your landlord proactively contact you to renew your lease agreement. It should really be you doing that 6 months in advance and saying, I want to renew my lease, or no, I want to terminate my lease agreement because I'm relocating. Make sure you do all of that in advance. In addition, employment contracts that have fixed dates, make sure you are the one that is proactively going to your employees and saying, let's renegotiate, let's sign an updated contract, or no, apologies, by the end of this contract period, we are not going to be renewing. Understand how all of this can impact you on a day-to-day basis, and you've got to make sure that this paperwork, which China is renowned for, is truly up to date. And it is advisable to get health checks done to make sure that you are aware. One item I didn't add here is your insurances, for example. If you have office insurance, director's insurance, third-party liability insurances, again, make sure your insurances are also up to date. So all of this corporate compliance activity and work, and ultimately its administrative bureaucratic work, is up to date. It's critical to maintain your China business because obstacles do occur, breach of contracts do occur, and you don't want to be able to give leverage to that other party when you're going through court situations or mediation situations. Now, I've added here one item which many of you might think is a bit odd to add in a corporate compliance presentation, but I've added here registration of a branch company. Now, why have I added this? What we see quite frequently is you may have set up a Shanghai LLC that's doing all the activities, but over a certain period of time, you may have started hiring salespeople in Chengdu, and there's no entity in Chengdu. You have not checked the regulations and you've hired these people from your Shanghai LLC. You've rented an office that's also being paid from your Shanghai LLC. Legally speaking, if you have rented an office in Chengdu, you have people on staff that are based in Chengdu, you need to open a branch company in Chengdu. You then have the decision to make whether you want the business scope of that branch company to be as an operational structure, meaning that entity should be able to invoice in its own company name as a branch, and it should be doing its accounts and taxes itself, or it's a non-operational branch whereby it's just a pure liaison office and everything is actually being handled from the Shanghai LLC and consolidated directly under the Shanghai LLC. Both options are open to you. Just be aware that if you do have a structure built in another city in China, you do need to register it as a branch. Have the appropriate licenses for it and make sure you're legally compliant with that other office. Now, what do I get as questions? Obviously, the first question I get for people that are just starting off in a new city is, if I'm only employing one person in that city, he's working from home, do I really need to register a branch? Well, a branch company requires a registered office address. So the first step would be, do I need an office in that location? And in theory, even if you've just had one person, you should be renting an office space. It can be in a business center, and you have a one-person workstation. Obviously, and it's common knowledge, all of this increases costs, right? But just be aware, if you don't register that branch, you're not actually legally operating in that city. Worst case scenarios that I have seen is that office neighbors denounce you to the local authorities. You get surprise visits coming to that office or coming to that individual's home and saying, what are you doing? Asking for certificates, asking for documentation. That's really worst case scenario. you'll get a slap on your hand, you'll get a penalty, and you'll get a certain time frame at which you should be then establishing your branch company. Now, in most cases, nobody gets surprise visits, but do you really want to take that risk? Our suggestion, obviously, in China, being that our clients are sitting in Europe or sitting in the US, is to be fully aware of all risks if you don't comply, and if you do comply, what you need to do to remain compliant. So, in terms of the business scope, as I mentioned, you need to decide whether you want to be operational or non-operational. And don't forget the ongoing compliance in terms of accounting, tax, payroll, and other administrative functions that have to recur in that branch. It's all very, very similar to your Shanghai LLC that I've used in the example. You have to do accounts, you have to do tax filings and declarations, you probably have payroll, and obviously there will be other administrative functions if anything changes within that structure. So be aware of this concept of the branch company. And I'm obviously seeing this more and more as my clients are based in China for longer periods of time and they're expanding locally in the market. They want to go into new cities, they want to have local offices in those new cities, they want to have a presence in those other cities, and they just need to be aware of what they need to do to remain compliant. Now, I also have a lot of clients that are at the stage right now where they were in a rush to set up their company, as is very typical. Most clients that come to me, they say, actually, we should have been established yesterday. So what they do is they will have hired somebody, a local mainland Chinese, who sets up a domestic owned entity with the idea that they're always going to transfer their shares to their overseas shareholding structure. In most cases, this never occurs because they forget, or they don't really pay attention, or it was so easy and they trust now this mainland Chinese individual. The issue, though, is you have paid money quietly to this domestic individual to set up this company and run and operate this company. There are funds that have been transferred over to that entity that are, in theory, belonging to your name. So in some way, you are tied to that structure. So our recommendation is always transfer the shares at some point. Make sure that you have a clean and transparent structure. I have too many clients now approaching us saying, I never got it done. We did it 2 to 3 years ago, and I am now, after 2 to 3 years, clueless about what's happening in that entity and what's happening in that structure. But I keep transferring funds for working capital to manage and operate that entity. So, you know, at that point, you then have to pay more because first you have to do a health check. Is everything compliant? Do you really want to purchase that company now? Are you sure you want to purchase it? And the second is, if that entity has been profitable, you will be required to create an evaluation report through a real estate and asset appraisal company in order to evaluate how much does that entity cost you. So you're going through so many more steps, actually, once that entity is already established, to just do this share transfer. And obviously, if it is profitable, you know, you have to then consider capital gains. So this all relates to the incorporation phase of your structure. If you were rushed, which is conceivable, and you did establish through a domestic company, make sure you do those transfer of shares prior to profitability so that you don't have to do a real estate and asset appraisal. And make sure that although you indirectly own that entity, you are fully aware of what's happening in that entity and you have a certain level of transparency. That's really the tips that I can offer you in regards to that. And then really do consider about doing this share transfer as soon as possible. The share transfer agreement must be signed. There must be an evaluation that is done, and it should be at the amount of the registered capital that was input. That's the minimum that's a requirement. The time frame in terms of doing a share transfer is lengthy. It's almost the same time as actually setting up a company. So again, be aware of that. Extensive documents which need to be notarized and signed, similar to the establishment of a company. And basically, you're then converting this structure from a domestically owned enterprise into a wholly foreign-owned enterprise or a foreign invested commercial enterprise. For more information on transfer of shares, because it is quite a complex subject, if you do have questions, then either type them in or let me know personally if you want to discuss it. Now, I also have companies that are at stages right now where business is not going well and they are looking to liquidate and exit the market. So it is a part of a corporate compliance procedure, although the majority of that procedure is related to tax compliance issues versus legal compliance issues. But you do need to be aware, if you do want to exit the market, this relates to how you're going to exit the market, which should be stated in your Articles of Association, a variety of options. And you should be aware, whether you're a representative office or an LLC, what it takes to liquidate your company. It's not as straightforward as everyone assumes it to be, and the time frame for liquidation for an LLC is approximately 18 months to 24 months. And the big delay there comes from the tax authorities, who will do a very close review through the closure audit that needs to be conducted based on the last 3 to 5 years of establishment. For a representative office, it's a smoother process, primarily because a representative office is only a cost center. But the tax bureaus do take about 9 months to, again, go through the closure audit that is required. In addition to all of that, what a lot of people are also not aware of is right now, in terms of the corporate compliance sector, January to June is the peak season. And the authorities are focused on clients that are existing and are continuing to operate in the Chinese market. So if you are planning on liquidating, I wouldn't suggest starting that process until really you've completed the annual compliance procedure. So July, August is really the best time frame to begin, because then the authorities can focus on the audits that are issued and place that on top of their priority list. Prior to that, January to June, they will put all liquidations, whether it's for an LLC or a representative office, at the bottom of the pile, which just increases the time frame to close down your entity. Now, for an LLC, any change that occurs within the structure of the Chinese entity, which means the registered office address, the corporate structure, the registered capital increase, setting up a branch company, etc., 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 changing exit strategies from the Chinese market. All of these changes, it stems from the change of the Articles of Association. So the first item that needs to be updated is the Articles of Association, together then with all the application documents that are associated with it. The Articles of Association are the company's bylaws. So you always need to make sure that you have the most updated version of the Articles of Association on hand to work from that if there are any future changes that need to occur. One of the key points that many people don't realize is that in order to prove that there has been a change within the company, you should get in return from the Administration of Industry and Commerce a chopped and verified Articles of Association copy or original. Once you have that original, you can work from that in case any future changes have to occur. So the Articles of Association, one of the key documents associated with the company kit that you are then formulating, which encompasses all your licenses, all your chops. But the Articles of Association are really the document you need to keep track of, or your corporate compliance officer must keep track of it. Now, one question that I always get, particularly in the incorporation phase, but on occasion I do get it also once a company is established, is whatever happens to this famous feasibility study report that has to be created as well as the Articles of Association when you're incorporating an entity. Feasibility study report is actually, from my perspective, quite a useless document. It's primarily utilized by the authorities to make sure that you have done your business plan and you know how your company is going to operate and what your expectations are for the development of that company. So you do have to provide a 5-year plan in terms of P&L, in terms of balance sheet, et cetera, and you have to kind of give a study, type of like a market research study in regards to the operation that you're creating. That report is never going to be looked at again. It's primarily used for the incorporation stage. It never has to be updated. no government authority is ever going to look at it again and say, oh, you didn't reach your targets, naughty you, now you can exit the market. The feasibility study is just purely a study to show to the Chinese government in the incorporation phase that you know that you're going to be operating your business and you've thought through your business plan. Now, the remainder of the presentation is looking at individual changes that you're planning on doing within your structure. So the first item that I've listed here is change of the registered office address. So in relation to the implementation of your company, as you know, one office address is one legally registered company. And no virtual offices are actually permitted in China. And as I mentioned earlier, surprise visits occur, so you really do want to be careful and you know, as food for thought, think about having an administrative person on staff. Now, issues that arise once you are established. If you have decided to make your registered office address not your operational office address, what can happen? First, surprise visits. Government officers will go to your registered office location. They won't go to your operational office location. Two, if it's found out that you are registered in an area with special treatments, but your operational office is located somewhere else, that's a big no-no. Penalties can exist, and there will be a time frame for you to exit that area or make that area operational. So be wary of that and be privy of that. And in worst case scenarios, what I've seen is you may no longer get those preferential treatments. So be careful in terms of operating as you're not supposed to operate. You should be operating where you say your registered office address is. And if you do want to change addresses because you're expanding, then just be aware if you're changing districts within a city, you do have to do a closure audit with the tax bureau in your current district and reopen with the tax bureau in that new district. This process is extremely tedious, and ultimately what you need to be aware of is that no tax bureau wants to lose a client because you are part of their tax revenue. So the closure audit is time consuming. It usually takes about 8 to 12 weeks, which means ultimately you may not be able to issue VAT invoices in those 8 to 12 weeks. The ideal would be that you don't change districts, that actually if you do need to expand and move into a new office, you stay within the district that you have incorporated your entity in. In terms of changing cities, this is a big dilemma. You know, you may have said, okay, I want to establish now in Shanghai, but in 2 years you say, no, Shanghai was a bad choice. We now want to be in Beijing. Here, the issue is you're looking at completely different government authorities. You cannot just relocate from city to city. You need to actually liquidate your company in Shanghai, which, as I mentioned earlier, is an 18-month to 24-month period, and reopen an LLC in Beijing. One loophole that we've been recommending to clients, but it's not a transparent method, is to move your operations, so the assets and the people, from your Shanghai entity to Beijing by opening a branch company, an operational branch company. The Shanghai company will have no staff, no payroll, but it would still need to have an office address, so you would still have that cost. It would still have to do tax filings, and it would have to do all the consolidations from the Beijing branch company. So not the best solution, not something that I would recommend. I mean, you should really think in the implementation phase, where do I want to be, what would be the most effective solution, so that you can avoid changing from city to city. It's just additional cost you really don't want to incur. And remember, which is a very key point, which will come at my last slide, is the following. If you don't update your registered office address within the various certificates and licenses that exist, one, you could have people going to the wrong registered office address. And two, when it comes down to your audit, your auditor will ask you, if they are a good auditor, they will ask you, why are you located not in your registered office address location? And your answer may be, oh, we didn't do the change yet. And they will say, well, I cannot provide an audit of good standing if you don't change. So as soon as you're changing office addresses, please make sure that you're updating your certificates and you're going through this compliance procedure as it occurs. The next is the change of the name of the shareholding entity. Now, let me clarify what I actually mean here. So as I had mentioned earlier, you have the option of transferring shares. So for example, you could have been a UK company establishing a Shanghai LLC. You now have been given tax advice saying UK was not the best location. You actually should change the holding structure of the China company to a Hong Kong company. You have to go through a transfer of shares. Basically, the UK is selling the shares of the China entity to the Hong Kong company. But we have a lot of cases now of acquisitions that are occurring. So let's say the UK company is now called XYZ Limited. They've been purchased. The UK company has now been required to change its company name from XYZ to ABC Limited. You need to inform the authorities in China of this change of name of the shareholding company. The biggest challenge that exists is explaining to the Administration of Industry and Commerce that there has not been a transfer of shares, but rather that is just the name of this holding entity that has changed. This requires a lot of documentation and proof within that documentation that just the name has changed. It's a very straightforward process once you make sure that those documents exist and those documents are available, and it's relatively straightforward. But don't delay this process again. This has to be done as soon as it occurs. Change within the corporate structure, this is something that happens on a daily basis and something that cannot be avoided. I've listed here an overview of what the corporate structure looks like in China. You have the shareholder, you have the board of directors or executive director, the GM, the legal rep, and the supervisor. And for representative offices, you have a chief representative. So on the next slide, I've listed key points in terms of what we see on the market with our clients. The legal representative is really the key role in terms of ongoing corporate compliance procedures, because the legal representative is really the individual that is signing all documentation in relation to any changes that are occurring within that entity. So you need to make sure that this legal representative is, one, willing to sign all of these documents, and two, is readily available to sign all of these documents. Where is he based? Where is he residing? Is he traveling a lot? Can he print documents and send them back very quickly? So how you select the legal representative is critical in terms of making sure that any corporate compliance procedures that occur once you are established are efficient. The legal representative is really the one that's in the key role. Obviously, for any big changes like transfer of shares or things like that, that's when the shareholder comes into play. But really, for anything else, it's the legal representative. Now, in terms of choosing individuals and providing recommendations, I really prefer to do this on a case-by-case basis, and in terms of understanding what are the requirements of the company, who do they have on staff that can take these roles, and then being able to recommend who I would suggest to take on those roles. The biggest issue we see, obviously, in the ongoing maintenance or the ongoing flow of the company is when you need to terminate individuals within this corporate structure or when individuals resign within this corporate structure. Main point, you need to have replacements readily available. Nothing can be filed with the Chinese government unless you have a replacement on hand. So when an individual has been terminated or whether an individual has resigned, you need to make sure that you have a replacement readily on hand who's willing to take on that role. So even when you are implementing your structure, you should think about these plans in terms of finding replacements and having replacements readily available. When you terminate individuals, usually when you terminate anyone in a corporate structure that has a role of board of director, legal rep, GM, supervisor, they're probably not going to be happy about the termination. So one of the tips that we have is you may, once you appoint this individual, you may want to have a document readily available that they sign saying, in the case of termination, you are willing to sign these documents in order to be able to replace you once we have to do an update in the Chinese structure. And have at least that board resolution completed, signed by all individuals, that yes, the supervisor or the director, if they are terminated, you have a replacement readily available. That would be my advice in advance. Why? Because I've seen too many cases where you have people terminated, they're not happy about the termination, and until a compensation package is finalized and agreed upon, they're not willing to sign anything. On the other side, when people resign, they want to be replaced immediately because they have liability within that corporate structure, and they're not working even for the company anymore. So again, when people resign, and just in favor of the person who has resigned, make sure you have a replacement readily available. We've had situations where legal representatives who have resigned from the entity, the headquarter, and they are still legal representative in the China structure, it's taken a year to find a replacement for that role. And I've seen also individuals sue companies because they are taking on a certain liability in the Chinese entity because no replacement has been found. So again, think about this. If you haven't implemented yet, think about this now. And if you have implemented, think about these scenarios in case any of these situations arise. One last tip is really think in advance who you want to appoint. Talk to these individuals. The reason why I say that is that we've also had a lot of clients with very high turnover. And we've had cases where companies have gone through 5 or 6 changes in their corporate structure in a year, which is tremendous. So what it does is just increases your cost for your corporate service provider or your lawyer to make those changes, and it gives you a headache because you're constantly looking for replacements. So again, you know, have a backup plan. Know what you're going to be doing. What does happen also quite often is clients and companies wanting to switch banks and wanting to change bank signatories. And the reason behind the change of the bank signatories is obviously the reason behind the change in the corporate structure. Switching banks is a headache. And you may have very good reasons as to why you want to switch banks. You may have chosen a local bank and you just cannot communicate with the bank officers because they don't speak English. Or you're working with the foreign banks and service quality is extremely poor. You don't have a relationship manager and you just want to switch to another bank that can offer you a relationship manager. Opening new accounts and closing accounts, it's a very bureaucratic procedure that encompasses an organization called the State Administration of Foreign Exchange. Be aware of that. It's not an automatic process where you can just say goodbye to one bank and hello to another bank. It can take up to 2 to 3 months to do this switching. So again, be aware of who you want to bank with, research that prior to implementation phase. And if you're in that period right now where you have been implemented and you're just not happy with the banks, just realize the time frames. Now, a key point here, when you are switching banks and you're opening with a new bank, is that the legal representative will have to show his original passport to the bank. The banks don't really care about meeting the legal representative. They care just about seeing the original passport and the person that exists. So if the person cannot fly to China, then generally what we would recommend, again, for efficiency purposes, is to courier by registered mail the passport, and within 48 hours the person has his passport back. It's really a very quick procedure. Adding bank signatories and terminating bank signatories, again, you just need proof. And really it's related to the corporate structure changes. I would just like to mention something in terms of changing the corporate structures, and it's a relatively humorous story. So we did go through a termination of a legal representative. It was a very bad termination, and basically complete contact was lost with that individual. And obviously we needed documents signed by that individual that he agreed with the termination and he agreed with the change of corporate structure. As sort of a joke, we also went to the authorities and said, well, this person has died. We don't know if he's died. We have no way of reaching out to him. And they came back and said, well, if the individual has died, you need to show us a death certificate. So it does happen, and it's something to be aware of. If you have anyone in the corporate structure that passes away, unfortunately, you do need to show proof of the death certificate to show that this person has actually passed. So again, the Chinese governments, they really want proof. Every time you do any type of change, they want to know why, they want to see documentation, and it's the same with the banks. If you're adding bank signatories or terminating bank signatories, it really relates to the change of the corporate structure, and you just need to be aware of that. Changes to the business scope. Now, this is something that happens quite frequently, primarily because you've been in the market for quite some time, you're familiar with the market, and you want to expand on your service line. And now you want to change your business scope, add on to the business scope. Here I've listed the basic scopes for a management consulting company and the basic scope for a wholesale trading company. Absolutely, can you add on to it? There are no issues. The only thing you need to be aware of, and this leads me on to the questions for consideration, is do you need an additional license in order to be able to add that activity into your business scope? So, for example, if you're looking at a management consulting company and you want to add payroll functions or you want to add accounting functions, you will need to apply for additional licenses first before you can change your business scope. The same for a wholesale trading company. If you, as you can see, you need to say what products you're going to be selling. If you now want to add food and beverage, you've never done food and beverage before, but now you want to add food and beverage, you do need to be aware that you need to get a food and beverage license. And to get a food and beverage license in China, there are a certain amount of criteria you need to have. For example, you need to specify where the goods will be warehoused and are they refrigerated in case you're importing refrigerated items. So be aware, anytime you want to update your business scope, generally you have to understand what additional licenses may you need to be able to do that update. In addition, please be aware that generally nobody ever removes items from their business scope. If you don't do a certain activity, it doesn't matter. Nobody's going to punish you for not doing that activity, which is why in the implementation phase of your entity, we recommend to have as broad as possible a business scope as can be. Obviously, that comes with certain limitations, because if you need to fulfill certain criteria to have a certain item in your business scope, you may not be able to add it at that time because you're not ready to make that investment. So creating your business scope in the implementation phase and updating it as your business progresses is important. Now, why is this critical? It's critical because the auditor, again, if it's a good auditor, will question certain activities that you're doing, and if they're not mentioned within your business scope, they will ask you why it's not in your business scope and are you actually permitted to do those activities. So it is critical. Anytime you want to start a new business line or a new activity, make sure you update it within your business scope. The application to increase the registered capital or transfer the foreign debt loan is an important issue, particularly from our experience within the first year or two of operation. Now, the first item you need to know is who is the State Administration of Industry and Commerce. The SAFE is actually responsible for controlling all foreign currency that is coming in and coming out of China. Your registered capital will be approved by the State Administration of Foreign Exchange. Can you increase your registered capital? You can. Can you increase your total investment? You can. But do you really want to do that? The reason I say that is because it is also your liability. And the minute you increase your registered capital, you are increasing the liability of the company. There are other methods of bringing funds in case you're running out of cash. And for those, we can discuss on a case-by-case basis depending on what situation you are in. But be aware of increasing your registered capital and what risks it does contain if that occurs. Now, rather than increasing your registered capital, what you could do is transfer your foreign debt loan. The foreign debt loan is the amount, which is the total investment minus the registered capital. And that can be brought in. You do need a loan agreement associated with that foreign debt loan, and you can repay back the funds. You can also apply for loans locally. You can also apply for loans overseas. Your HQ could also apply for a loan that is then transferred over to your Chinese entity. You need to then speak with the banks personally to understand what are the criteria in order to be able to obtain those loans and what are interest rates. I think that's probably the most key part in terms of obtaining the loans. Now, I started off today's presentation looking at the annual compliance procedures, but I did want to provide a slide for your review to understand what are the 5 steps to remain compliant once your calendar year and fiscal year are completed. You do have the annual audit requirements. You do have the annual individual income tax filing requirements, the annual profits tax filing, and this is then followed by the annual inspection, business license, and registration certificate renewals. All of these 5 steps occur basically from January to June of each year. And as I mentioned, for the corporate service providers, as well as for the local government authorities, that's really the peak season in China. I will be presenting a webinar, which will be our last webinar in this series, going into detail about the various annual compliance procedures that you need to understand when operating your business in China. So if you are interested in that topic, then please do register for that event. So now my last slide. My last slide is in relation to tips for preparing and maintaining the documentation. So what do you need to be aware of? Well, the first point is be prepared that the application forms are in Chinese. You should organize that you don't sign anything that you do not understand or you cannot read. Make sure all documents are translated either into English or into your mother tongue so that you know what you are signing. The Chinese governments and the authorities will not accept any other language other than Chinese. The translated versions are only for your review and so that you know what you are signing. It is therefore really important to also have a very good translation company on your side that it can assist you with any types of translations that occur. Be prepared to sign numerous copies of resolutions and application documents which all have to be submitted. Anytime there is a change, you usually have to sign 5 versions of the same document, if not more, in order to be able to have a smooth process for a change of anything that occurs with your entity. So although it is daunting to have to sign so many documents, be prepared for it. It's very commonplace. You must sign everything with a blank ink pen. And why have I highlighted this? Well, the first is, it's no joke. You do need to sign every single document with a black ink pen. Not a ballpoint pen. It has to be type of a fountain pen that doesn't show a mark at the back of the page. Don't ask me why. This is a requirement by every single Chinese government office. It's no joke. If you provide any documents to your corporate service provider or your compliant officer in red or blue or with a black ballpoint pen, they will be rejected and denied. And this is where, again, efficiency is of the utmost importance, especially when you want to do a change quickly. For anybody that is in the corporate structure, when you implemented your entity, you provided your signature on documents that you signed. That signature was uploaded into the computer software systems. If there's any future changes that occur within the entity, make sure you remember how you signed the documents. I've also had too many cases where clients cannot even remember how they signed the incorporation documents. They don't even know what the signature looks like anymore. That is a key point for you to remember. What signature did you use? And make sure you use that signature for all future application documentation. Be aware of procedures. So in most Tier 1 cities, applications will first have to be done online, followed by original documentation submission. If you do submit the documents online, there'll be an immediate record of online filing which can be obtained, which is great because you can easily track the process and speed of how an application is being done. If you're in the lower tier cities, then it's still the old school style. Everything has to be applied manually in originals, and you just have to visit the various government bureaus to find out how much longer it's going to take to get approvals. So be aware of these various procedures. It's always important to obtain the approved and amended articles of associations and make sure you're always working from the latest amendment, so you know exactly what has been updated, what has been changed, and you have all these updates filed away. One key point, which is unlike the West, and many people are not aware of this because in the Articles of Association it does say that board resolutions need to be submitted. Board resolutions do need to be submitted. Annual meetings should occur. Does anybody track them in China? No, nobody tracks them. Board resolutions only have to be filed when you want to do a change. Board meetings, board meeting minutes don't have to be filed anywhere. But it is our recommendation, anytime you have a board meeting, anytime you are making decisions, whatever decisions they may be, make sure that you have updated them internally and you have filed them yourself so you know with transparency what has occurred in each stage of the development of this Chinese company. Last but not least, because of the amount of documentation that exists, we do recommend to appoint a compliance officer and keep track of the documentation. This compliance officer could be an external lawyer, could be an external corporate service provider, could be an in-house lawyer, as you wish. But you should have someone internally keeping track of all of these changes that are occurring within your entity over time. Because it is a tremendous amount of paperwork, and you just always want to be updated on what is the current status of the company. Is it in good standing? Have we updated all the updates we need to make? If the audit is about to occur, are we sure the auditor won't raise any questions, etc. So these are my 10 tips in terms of corporate compliance procedures and obviously making sure that you remain compliant within your entity. Barbara, that's the end of my presentation, so I think we can start the Q&A.
Okay, thank you so far, Christina. There are a series of questions that have come in during your presentation. So let's start with the first one. Can we expect an even higher increase of changes to the regulations and requirements with the Chinese economic crisis?
That's actually a very interesting question because from our view, actually, regulations have only assisted in improving processes and improving corporate compliance procedures and making things much more efficient, particularly in the Tier 1 and Tier 2 cities. In relation to the economic crisis, I can't imagine the government going back on its word and making things more bureaucratic and more difficult than they are now. I've been in the market for 13 years, and I've only seen, as a corporate service provider, I've only seen improvements occurring. So I don't foresee that happening, no.
Okay, there was another question coming in. If we do not comply with the corporate compliance demands of the Chinese government, what could happen to our company in China?
That's a good point, which I didn't really touch on throughout the presentation. Ultimately, if you don't do certain changes, then one, you could be blacklisted within the Administration of Industry and Commerce's website. Two, your auditor, again, if it's a good auditor, will raise these questions if you haven't made changes. And ultimately, you could get into a situation where the audit that is drafted is not in good standing. So you have to make sure everything is updated. In addition to all of that, we've had situations recently where companies are looking to liquidate and they've never updated their corporate structures. So people have resigned or people were terminated and they still have those roles. They're now going through a liquidation phase and we need original documents signed by those people that are appointed and they cannot be found. So, and powers of, on top of all of that, powers of authority, powers of attorney cannot even be issued because those people are no longer available to sign those. So it gets into critical situations if changes want to occur in the future and you don't have those people to actually sign and change them.
Okay, the next question is very similar to the one just now. If we do not comply with the corporate compliance demands of the Chinese government, are the individuals appointed within the corporate structure liable for failure to meet the demands?
Ultimately, the shareholder of the company is the ultimate power of authority of the company. So really, it's the shareholder that would be liable if the company doesn't remain compliant. However, the Chinese government does have this position called the legal representative, and the legal representative is the face to the local entity. So the first person to be contacted if the company hasn't been compliant will be the legal representative. No criminal activity has occurred, so there's no worry or fear that one should have that this person will be taken to jail. It's just this person will be told off and penalties will need to be paid by the company and updates will have to be made as soon as possible. So whoever takes on the role of the legal representative, it should be their obligation also to make sure that the company remains compliant so that they can avoid these meetings with the various government authorities.
Okay, thank you. Next question. How can we monitor that these compliance procedures are done correctly?
So in China, unlike most other countries in the world, there's no such thing as a certificate of good standing. To those of you who don't know what that is, a certificate of good standing basically highlights that your company has been compliant, and it gives you the updated status of the corporate structure, the registered office address, the total investment, the registered capital, et cetera, et cetera. So you can always go to the Administration of Industry and Commerce to get what we have defined as a certificate of good standing, but really it's just a document which shows what is the current standing and status of the company so that you are aware of what needs to be changed or what needs to be updated. That's the only really way to know that you're compliant. Otherwise, it's a matter of creating internal control systems and monitoring systems through basically a compliance officer to make sure that application documents have been submitted. What are the updates with the various government bureaus? Have the updates been made? Is there proof that the updates have been made? And obviously the key document is the amended Articles of Association. Do you have that on hand for the next project that might arise?
Okay, we already arrived at the last question of our Q&A session. What does the year-end audit entail exactly, and does it involve a review of the corporate compliance issues?
So the year-end audit report is primarily the auditor focusing on the financial status of the company and looking at the year-end financial management reports. If you're working with a good auditor, then generally this auditor will also raise questions in relation to the legal compliance side of the business. It comes sort of hand in hand. But it is recommended that depending on the size of your business and how new you are to the market, to do internal health checks, to review potentially not only the legal compliance side of your business, but also the financial side prior to doing your formal audit. And just doing these internal health checks to review that all contracts have been renewed and signed, lease agreements have been renewed and signed, employment contracts have been renewed and signed, that all licenses are up to date. These health checks really give you an understanding of the status of your company as well, which unfortunately you cannot really obtain from the various government authorities. You can only do that by really going into the company and reviewing the documentation that you have. Now, the biggest difficulty that we've seen in terms of conducting health checks is that if your team in China do not want you to find out that you've not been compliant, they can, one, create fake documentation and provide it to the auditors, or two, they can just not be cooperative at all and not submit documents. So what we have found as quite effective is having somebody from the head office jurisdiction travel and conduct the audits with us so that they can see firsthand difficulties in potential communication issues or difficulties in obtaining documentation so that they can be readily there at that moment in time to fix internal procedures that need to be fixed.
Okay, thank you. Unfortunately, we do not have enough time to answer all of your questions. But in case you have further questions or want to talk about your individual cases, feel free to contact Christina privately after the webinar. Here on this slide, you can see her contact details. You will be receiving a copy of this presentation together with Christina's contact information. We hope that you enjoyed this webinar session. Last but not least, we want to remind you all of our upcoming webinars in this series. If you're interested, please register on the webinars on our website. The recording of this webinar will be posted on our YouTube channel and distributed on our social media sites such as LinkedIn, Xing, and Twitter. In addition, if you're interested in our weekly e-campaign highlighting all the latest resources we publish, do not hesitate to subscribe. It is free of charge and can be easily done on our homepage by inserting your email address into the section called chinainvest.biz. Thank you, Christina, for presenting to all the attendees and registrants. Thank you also to all for joining us today. We look forward to seeing you again soon. Have a pleasant evening and goodbye.